Summer school. All right, good morning. How are you? right, let's get on with it. Guten Morgen. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. Yeah, look at that. I got summer school behind me. Yeah, look at that guy. Oh, is it this guy? This guy. That guy right there. Yeah, cool. So we got summer school coming up. I want you to get signed up because we are starting in just 11 days. Lots going on this summer. In particular, we are around that period. There's Fed meetings going on, and I mean, dude, it's busy. But we gotta do it. So, anyways, look. Oh yeah, I guess I'll put a link and I'll show you the site in a second here. There we go. But it isn't important. This is about actually pulling the trigger. You're going to learn how to golf by going out on the golf range with a coach and hitting 1,000 balls. So yeah. So anyways, cool. So we'll get on with that. What else going on in the world? Well, we got some fundamentals. We got some technicals. We got to go through all our charts. Yep. Very interesting time to be a trader. Pretty good time to be a trader. And the weather's nice, huh? Finally. So anywho, here's our summer school. Get a little closer look here. Okay, you're going to do things like technical simulation. This is not just where you watch a lecture. You're going to learn by doing. You're going to roll up your sleeves. You're going to get your fingernails dirty. Okay? You're going to learn by doing. You're going to learn how to improve your performance. You're going to learn how to be your own coach. Okay? And you're going to learn how to use tools like Tradars, like QuantBox, and pull it all into your charts, so on and so forth. Okay? Both made up, both. Cool. So anywho, QuantBox helps you do your fundamental analysis. This is a tool that you should budget for in your successful trading business. Tradars does technical analysis for you. Okay? So anywho, this is something that you also need to budget for your successful Forex trading business. Yeah. Some person emailed me today and they thought that it was going to make all the decisions for them. They called it a signal service, and I almost died laughing. I fell out of my chair. So, no. Okay, this does technical analysis for you. It doesn't make decisions for you. It's not your mama. It's not your papa. Okay? So what you want to do is technical analysis and fundamental combined. Okay? Technical analysis, fundamental analysis, and then you make trading decisions. Uche says, make what affordable? Summer school is cheap. I don't even remember what I charge. It's cheap. What do I charge here? $150. It's $150. Cool. And then you want a good broker. And in particular, you want an ECN with straight through processing, STP. This is what you want. I'm telling you, you got to have the right tools. You got to have the right service providers. So I recommend Trader's Way as your ECN. Do your own due diligence. There's not a lot of ECNs out there because it's a why is it not normal? It's let's say an ethical business model, which makes it unusual. Yeah. Oh yeah, Uche. All of this is cheap. Or I should say affordable. Yeah, I should say it's affordable. Okay. Honestly, when professional investors see what I've built, they can't believe that I'm not charging 5, 6, 7, 8, 100% more money. Yeah. So it's already, all of that's already built in. All right, so let's go to our charts. Well, I guess there's one more thing I should show you. YouTube at QuantBox. I released the video today. It is scheduled. I haven't been doing this recently. Hey, I'm busy. This is Trade Like a Pro, incorporate the money market, Fed funds market, and QuantBox bias into your trade plans. Well, that's actually me smiling. Wow, that's a random picture. How nice. And so that'll come out in 76 minutes. Cool. Coolio. Okay, let's start. I just happen to be on silver. Okay, should we be cognizant of a double top? Oh yeah. We're into our ribbon, which is just the 2155. I try so many different ways to show you the same thing. Yeah, so many different ways. So that's just the 2155. So if you're a trend trader, that is a buy zone. Nobody likes the fact that it looks like it's double topping. Nobody likes that. So we're in a zone here. And so I might, but I may not buy now on the ribbons. Normally I would, because what it indicates to me is it's somewhat sideways, if I look at it this way. So we've gone from a bullish trend to a sideways trend. Yes, it might reverse. Yes, it might not reverse. That's the problem. So normally I would buy in a ribbon. Like, I have no problem buying here. I have no problem buying here. I have no problem buying here. I don't even have a problem buying here. But now there might be a problem. So I'm just cold, lying naked on the floor. Yeah. So yeah, too bad. Too bad. So sad. But yeah, we'll see. That's the thing. We have to wait and see. What else could we look at? My WTI. Okay. having a down day, but remember your rules of engagement. You may plausibly buy a dip. There's two lines that matter to me. One is the lower bound, and remember, we already assumed a bounce. And it did hold, it did bounce. Okay, and then we broke through that high. So could I wait to set up a buy a dip scenario? Yeah, and probably around 78, right? Maybe little, is right? Somewhere in here, maybe. So if I'm going to be a bull, I sit and I wait. Okay, I would have thought this was going to be interesting. Apparently not. So I continue to wait. Too bad, so sad. Continue to wait. But I do have permission to wait as a bull. Okay. Brent coming down hard as well. S&P 500 and all the other stock markets were rejected at their obvious highs. We'll see what's going to happen here on Bitcoin. I created this trade plan for you a week ago, and you should be sort of like game on at this point. If you're going to do it, right? Or I should say more like be prepared to knock it down or knock it up. Get her knocked up. Right? Right? So anyway, so we could zoom in here. Let's change the settings here. Let's go daily confluence, bullish bias. Okay? And I can zoom in here and I can start buying dips if I wanted to. Just marking key lines. Make our key line pie. So these are all different things I find interesting. Could I go in as a bull on Bitcoin? Yeah, that would be what would be setting up for the day. Like that's what I'd be looking at. I'd be prepared. I'd be focused. There's like, is this trending? No. So you're gonna have to use a range bound strategy. I could do one of these things. It's a little cheeky, but you're kind of doing a previous bounce on the higher time frame. But I definitely have permission on something like that. Okay, so you start at the higher time frame first and decide whether you want to own it. Mark your levels. Drop in yet a smaller time frame. So you could see if this little play works out. It's just a trade, right? It's just a trade. Then it'll look something like this. Okay, we're going to work our way up a few more times, and then I should be concerned. Okay. What do you think? There's potential to get to 80,000. Okay. So we got a little trap and break that could last weeks. Any thoughts on that? Yeah, key day. Okay, like a coiled snake waiting for PCE tomorrow. Okay, a little skippy scalpy. Here's a 5-minute chart on Ethereum. Look how beautiful this is, ladies and germs. Down, 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 up, up. Sell. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, sell. Down, up, down. Oops. Okay. You see how it all gets caught in there? You see this? There's your change. So you wouldn't have known. Okay, there are some things going on, but like this is a classic sell. Okay, so this would have not produced for you, but then what does happen? Okay, you get the opposite price action. So now you got this, and you got this. Take this, which is the roll reversal. Okay, and that's the new up, and then a down. Here's your roll reversal. Up, here we are now. I would mark this out if I were me, and probably have a future that looks something like that. Zeal, the institutional trader community. Is that right? So the institutional trader community is hanging out on YouTube? Yeah. Yeah. Yeah, I'll give you like sort of I don't know, my instant comment on that. Like I know a lot of people in the industry, and in particular when you work at a big firm. I know, Zeal. I'm so sweet. They're not even allowed to bring up YouTube on their computers. Compliance shuts all that down, you know. But anyways, so anyways, Yen's, I covered that today in the Quant Box video. So in this video, I cover that here. Okay, so I already covered that hours ago. Oops, what happened to my... Oh man, when did I shut down my beautiful little chart? I did, huh? I accidentally killed my beautiful little chart. Too bad. So what were we looking at? It was Ethereum, wasn't it? Yeah, it's not here. Too bad. Well, luckily I can bring that back up. Except my camera's in the way. All right, and so there I got my little skippity scalpy, right? Oh, is that right, Zeal? Was he a former male model as well? We kind of have like industry slang in the male model world. So anyways, look at it, right? This is where we're going on the longer term. Okay? So it doesn't have to be a scalping setup. So, you know, what do you think of something like this later today? Well, that would only follow what has been happening. What gets interesting is noticing when the current process stops. So like you would assume something like this, wouldn't you? After all of that logic? Doesn't mean it'll happen, but I think it's a reasonable assumption. But it gets interesting when something different happens, right? Because then you got to assume that. Huh? Wouldn't you? Monday, Tuesday, Thursday. I laugh because I always think of The Godfather. I speak English, make a Monday, Tuesday, Wednesday, Friday, Monday. Okay, what do you stink? What do you stink? Smell like a plant? Okay, find your time frame. Find your time frame. Okay, so for a bear, that's definitely a top. For a bull, this is definitely a buy zone, and we're somewhere in between. So now this matters a lot. You see the layers of the onion? Now it matters a lot. So if it does head up from here, it's important because if you're a bull, the next target is here, 4K, let's say, but we might be on our way to 5K. But if we got below this zone, holy schnicker-schnocker, it's a long ways down. Okay? And you know how crypto is. It's like taking the stairs, walking up the stairs of a skyscraper, and then jumping off the building. Long way up and fast. Huh? So anyways, got to pay attention. Okay, notice how things change when you look at multiple time frames. So you got to start on the higher zone, higher time frame, and work your way down. I hope you remember doing this, back 2 weeks ago, I think it was. Okay. Look, so, right, we were here, and I said bears would sell here in the future, and then I said bulls would buy here in the future. Okay. Now, if we go higher, that's where bears would sell, and then we would pull back, and this is where bulls would buy. Do you guys remember doing this a couple of weeks ago? So what's happened in those couple of weeks? Well, it went up, okay, and then it came down, and now the question is, will it come up, and will it come down, and will it go up? And you got to understand what's actually happening, because I would actually change this. I think this is actually wrong. Who would sell there in this situation? Would a bear sell there? Come on, please answer. If a pattern like this occurred, would a bear sell there? No, no, no. What kind of idiot bear would sell a higher high? What a loser. What a nincompoop, right? What a gullible bull. Yeah, bulls are going to sell there. And you're like, whoa, 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 whoa. What do you mean, Wayne? Why would a bull sell? They're taking profit. So it falls. Would a bear sell here? No, bears don't sell low. So who would buy, right? So they wouldn't sell there, so bulls would buy because there's no bears. So what happens is you get bulls buy and bulls sell. Bulls buying and bulls selling. What do we call that? An uptrend, son. Okay? So, I don't know the future, but could you be bullish on Litecoin? Well, if you're a bull, I'll tell you what. If you know how to swing trade, this is obvious. You buy at 83, your target is 97.5. That's obvious. If you don't understand that part, go to Investor Bootcamp, pay $88. Please make me rich. I'm going to buy a huge mansion, a castle, with your $88. Yeah. And I'm going to buy fancy cars. I'm going to get a jet. I want a jet. Yeah, so I'll get a jet. All with the $88. It's amazing. Or maybe, just maybe, you'll uncover more than $88 worth of value. Sorry, I couldn't do it without laughing. Yeah, so anyways, dude, if you don't know that, you don't you just don't know how to trade, right? So I want to make sure we all have the same language when we work together. And that's how I see our relationship. I see that we work together. I've known some of you guys for 15 to 20 years we've been working together. But we have a common language, and we can read our charts. For many of you, I could give you a chart like this. We would all look at it, and we'd know what the other person or the other people are thinking. We'd just look at each other and nod like, yep, I got that. Yeah. So like Jim is literally word for word saying what I would say, which is great. So we understand each other. You got to be on that level. All right. So anyways, that's cool, right? What a cool idea. Knowing where bulls will sell and where bulls will buy it back. Okay? And if it worked, you're going to do it again, and you're going to do it again, and you're going to do it again until it stops working. That's what a trend is. Usually what happens, and I talk about this in my book, it's this idea of almost elasticity, where the trend gets so far from the fair market value that it snaps back. And there's usually turning points, end of the month, end of the quarter, end of the season. Did you know there's seasonality to trading? Once again, I cover that in today's Quant Box video. I show you. There's a time to not, and I explain this. There's the trend, and there are times when you trade the trend. And then there are times in which you can prepare to sell the season, which may look like counter trend, but it's not counter trend. I never counter trend. But I can have a seasonal play, and I can have a trend play. But what will never occur is a counter trend trade or a random trade. There's, right? Like summer school, for example, will end a lot of things like random trades. It'll end trades that are late. It'll end guess trades or betting. Is what did I charge? 150? Is $149 too much for summer school? If it is, tell me. Okay? Everyone here should be a part of it. Right? I'm telling you, you're going to learn a process and a procedure of excellence. It came from people giving me feedback that they're like, yeah, well, I'm having problems pulling the trigger. This is what people said to me. And I'm like, oh, well, I can fix that. It's very much a tactical, practical, tactical issue, but it's also very much a psychological issue. So how do you fix something that is not just sort of a tactical, how do you kick down a door? Okay, right? How do you kick down a door? Well, you can take your size 12, kick and lean, right? There are different ways to knock down the door. But if you're afraid of what's on the other side, we have to overcome that too, don't we? You're like, I can't kick down that door. I've been trying and trying. Why? Well, actually, I think there's a pit bull on the other side. And behind that, a bad guy with a weapon. You're like, oh yeah, well that is pretty scary. So we got to deal with that too. The fear, the psychological. And I'll tell you what, we'll fix it. How do you do that? Jim's like, yeah, confidence is the key, isn't it? How do you get comfortable with that? You kick down 1,000 doors until you can do it in your sleep. And this is something that you will take outside of summer school and be able to continue the rest of your trading career. So you will learn how to simulate. You'll learn how to, I suppose you could call it journaling, a form of journaling where you have your track record connected with screenshots. Remember the whole idea of my book going back, reliving your trades a second and third time? You remember the chapter Forex, 4x the experience, 4 times the experience? You're going to not just get that, you're going to learn how to continue to be that way. I'm telling you. Okay? I'm telling you. Get it? Get it. Get on with it. Let's go. I'll bring up the link. And I decided to do it at Tradars this year. I've done it at QuantBox. I've done it at Boot Camp. Okay. It's cool, right? You see how he's looking at the button? It's good, right? Yeah. Anyways, I thought I did an all right job. All right. Thank you, Ed. Yeah. Oh, look at that. I didn't notice that. It flips to a mobile version and then changes the content. And of course, it changes it incorrectly. My dummy info is still in there. That's interesting. Huh. That's interesting. Cool. Learn something new every day. Yeah. All right, so let's move. Let's move. I gotta move. Give me the juice. They say I sound like a chulo. I haven't talked to them in a while. Relaxation. Ping support. Let us know tomorrow. Ping support. Swing on by. All right, so look at where we are. Okay, we know this. We've known this for a while. And, oh, yeah. Okay. Well, Frank, you have to understand there's a difference between the Russell, the Dow, the S&P 500, and the NASDAQ. Thank you, Jim. Okay. So, the Dow represents a couple of different things, different ways if you can think about it. You can think of it as multinational. You can think of it like international. How's international business doing right now? Maybe not good. Another way of looking at it is like a monopoly. These are monopolistic companies that are not likely to grow anymore. So like Salesforce reported yesterday that they make a ton of money, but they're not going to grow anymore because everyone already bought their stuff. Yeah. So they're just going to make money, but they're not going to grow 25% a year. It's over. They're a monopoly. All right. So that's how those types of companies are people they want to buy NVIDIA and have it go up 400% this year. You're not going to get that from a Dow company. Okay? All right, so no growth. But that's what a monopoly is. Now, the flip side of that is the tech is growth. People don't really get the concept of what does it even mean, growth? The stock price is going to go up. Well, no. If Dow is a monopoly, which means they already own everything, so you can't grow, right? How is Coca-Cola going to double their sales next year? They can't. They can't. Can NVIDIA double its sales next year? Yes. Okay, so there's this, right? So that's the distinction. So the Dow is no growth, and NASDAQ is, let's say, all growth. They're going to be big companies that are growing 10, 20, 30, 40, 50, 60% a year. Okay, and so they have a different profile altogether. The S&P 500 is a balance of growth and no growth, which we can call value and growth. There's a balance, okay? Medium to large companies plus companies that are growing 20, 30, 40, 50% a year. Now, okay, they too have different profiles, but it's a balance. The Russell 2000, that's small companies. Now, it's down a lot because, well, if the Fed is going to continue with a regime of high interest rates, it's going to hurt them the most because they're not really big enough to go to the bond market. It's expensive to issue a bond. So they're going to have to borrow money from a bank. And rates are high. And the Fed won't, if the Fed doesn't cut, they're going to remain high. And it's going to be expensive to do business and to borrow to stay in business. Your expenses are higher. Your profit margins are lower. Okay? So all these profiles are quite different. So if you think about yourself as a Dow company, well, what you might need to do is if you're going to grow, you're going to have to buy somebody. Now, you have a lot of money. So like Salesforce is a Dow company. It makes a lot of money. It has a lot of money. By the way, I was at their launch party when they were a tiny little startup. They didn't even call it Salesforce back then. Yeah. And you know what they called their launch party? The end of software party. Because the idea of cloud didn't exist yet. And CRM wasn't really we called it client databases, and there were no funnels yet and all that kind of stuff. So anyways, so Salesforce could go out and buy a growth company. Okay? They might not make a lot of cash, this growth company, but they're adding 30% more customers every year. But they're losing money because they're sort of in startup mode. Well, A company like Salesforce isn't growing, and they have tons of money. Problem solved. So they'll just acquire and grow that way. Okay, and so this is how sort of the ebb and flow of capital is happening. Now, the Dow is being hurt the most. Luckily, I'm exposed to the Dow the least. I was hoping it would perform different, but it never did, so I'm not heavily exposed to that. Now, NASDAQ is still rising. Notice that the projection is right here. My projected, aggressive high is right there. Okay. Yeah, that's about right. Okay, 19,008. So we got 2 shakes of a lamb's tail away from that. Should I be worried? Yes. Okay, yes. So I do my analysis. Okay, role reversal. Bullish buy zone. Easy, right? So could it fall down there? Yeah. And would I buy it down there? Yeah, probably, with technical analysis to confirm. But yeah, why not? Okay. But should I be worried? Yeah. Look how close we actually got to the target. 18,945. And my target's basically 19,000, right? So I could consider this a completed pattern. And that means the next move is probably somewhere like this, right? Unless I think the stock market's going to fall all the way until October. Yes, but not until Canada Day. So can I have a one more up? Okay, can I have a one more up? Can I go to a June high of NASDAQ? Right? NASDAQ. Okay. I just want to get what actual number is this to you. Okay. Do you think we can get NASDAQ to this level? $20? Well, things have to go our way. What if inflation in the PCE comes out low tomorrow? Talk to me, Goose. PCE comes out and it's low. Then people are going to say the Fed's going to cut. Making money cheaper for everyone, including businesses, to access. Which means their profit margins go higher, or they could borrow more than they used to get things more, done. So yeah, so it comes out low. Everyone thinks there's a September cut, and NASI goes up to the next level. Right? So I have it printed here. I don't know if you see it. But next projected buy zone. It's all calculated here. Yeah. Right, so like Frank says, hey, it'd be good for it to drop to the next monthly pivot point. Yes, but don't be too picky. It's a very generalized thing. I want you to be more and more generalized. Like, for example, what if it fell to the 21 like I've drawn here and took off and never hit the central? Okay. Or like, let's say you have a basic plan here. We call, right, on this daily is a bias. The daily chart is a bias for most of us. Most of you are intraday traders, right? It's not like you make, you don't trade on the daily, let's say. You're not most of you are trying to learn how to trade, to be in trades that last weeks. Okay? But most of you are in trades for hours, right? Or less. Okay? So anyways, what I'd rather say to you, and then let me get rid of this, is that somewhere in this zone, okay, this zone, this purple zone, right in here. It'd be cool if this was vibrating. Somewhere in here, could be the 21, could be the central, could be as low as, okay? Okay? But starting here, this is plan A. Okay? Imagine that's as far as you went. And then you asked Tradars. So why don't we bring up a Tradars? Tradars. Oh, I'm going to have to log in. All right. Log me in, Bubba. Okay, let's go to Radars. And I want to only look at, okay, stock indices. I'm going to turn them all off except NASDAQ. Okay. And then I go to the indices. And I'm like, hey, Tradars, I want you to watch NASDAQ for me. And nothing's coming up. Is it broken? No, there's no trade. It's looking for reliable, repeatable patterns based on, well, generally expected and generally respected trading patterns that work the majority of the time. And I can prove that to you quantitatively. In fact, I will, not right this second. So, look, two things are going down. This is how to trade like a professional, like how to be a boss. You want a sustainable business? You need to make decisions. And this is what the decision is. You say to yourself, you're looking at this chart, and you say, well, I think it's still bullish. Okay. Now, maybe things will change, but you could say, well, based on what you see here, okay. Let's see if I can get rid of the weekly pivots without, I don't want to have to, no. Anyways, so here's your plan for now. In the next, what? These are daily. What do you think? In the next 1, 2, 3, 4, 5 days? In the next week? You expect this to turn bullish. How many people are with me and understand the general idea here? In the next 5 days, it could be today, tomorrow, it could be Monday, it could be Tuesday, but you think there's a pretty good chance that this is going to go up. And if it does, you're going to buy it. How many people are with me? Sweet. Okay, you made the decision. Now, you meet with your technical analyst several times a day. And your analyst is watching the NASDAQ. Okay? And your analyst is watching the NASDAQ on the 15... Oops, make it a little thinner here. Delete. Okay? On the 15-minute chart. Okay? On the 30-minute chart. On the 1-hour chart. Okay? There's a 240. What's the last one? The big one. But we'll just call it daily. What is it? 1440? The 1440 minute chart? Okay. Okay. So it's looking at 1, 2, 3, 4, 5 time frames. And it's looking for at least 12 patterns. Each pattern has very, very, very solid rules of engagement. If these patterns don't form, for example, you know, how many bottoms do you need for it to be considered support? Like, you know, if you don't meet the criterion, or if it's messy, it ignores it, because to the machine, it's just not one of 12 patterns. And these are patterns that are reliable, like 70+% of the time. Okay? They work out. That's why they're patterns. So it's watching for these reliable, repeatable patterns. The 12 patterns on 5 time frames. So if price comes down to support and does something like this, traders will notice it. It will not make a mistake. It won't get lazy. It won't take the day off. It won't come to work drunk. It'll show you things have changed. Okay? It'll show you things have changed. Okay? But what's happening here? Well, you made a big boss decision, huh? Padrón, huh? You're the boss. You made a boss decision yesterday or today. You're like, yeah, Nazi's coming down. So you've either hedged, or you've taken some profit, or you've decided to do nothing. You're not randomly behaving, and you're not hoping things will work out. The second thing of your decision is you're like, you think it's going to fall, and in the next few days, it's going to rise back up, and you're going to buy it. So now you're using your tools wisely, and you're using traders to serve you. You do not serve it. So at some point in the future, you're going to see NASDAQ pop up here. Okay? What if NASDAQ pops up here and Tradar says it's bearish? Well, you're a bull. It's useful information, but you don't sell. But what if you waited, and not today, but maybe tomorrow after PCE, things start to change, and by Monday, Tradars is throwing up bullish patterns on NASDAQ? Well, you've been waiting for that. Your analyst has been watching it 24 hours a day on 5 time frames, so you don't have to do it. And then suddenly, your analyst comes to you, hey boss, we finally got a bullish trade plan. A bullish pattern is formed on NASDAQ. You're like, boom, that's what I'm looking for, huh? Ooh, rootness, tootness, right? And you stomp your little cowboy boots, right? And you walk over there and you, boom, you pull the trigger. Imagine how good your trading is going to be when you trade like that. Imagine how good your trading will be when you can trade like that. Okay? Now, this says FTSE up. Is this bullish? FTSE up. Possible bullish price movement. Oh, it's bullish, right? No! You joking? Look at this. Okay. But boy, if you happen to be a bull and the channel was up, see, it's a down channel. It's not bullish. So imagine things change and you start getting upward movement on NASDAQ. And it looked more like the DAX. Okay? Same thing like this. Rising wedge. Possible bearish price movement. Oh, so it's bearish. No, it's not. It's a rising wedge. It's not bearish. Prices are falling. Good. I'm a bull. I'm going to buy it, bro. So typically what I do is I look somewhere around there is what I would do if I were me. Right? And so my plan is I'm going to do that tomorrow. I'll buy it tomorrow. I don't know the rest of the words. But anyways, yeah. Okay? You use RSI. You know a falling RSI is not a buy. A rising. So let the RSI fall, and then we'll kick it off the trend. Shalaka-laka. I'll take the DAX to 20, bro. Okay? Oh, don't you just love trading? Don't you just love it? Look at that. Not a lot going on based on the news coming out as expected. What do you want to do on this one, huh? Not a lot of patterns. It's just not a lot. It's not a lot. It's good to know, though, isn't it? It's good to know. There's just not a lot of reliable patterns on a news event that came out as it did. Notice all the other scenarios were removed. It updated itself. And there's just not really a reliable pattern. That's really good to know. Hey, Europeans. Yeah, we got some market moving events tomorrow. Michael, I'm putting together a presentation on that, but I'm also going to do what I don't think anyone else has actually done before. I'm going to quantitatively prove how they work. So, for example, how many gurus on YouTube have told you this pattern? Every one of them. They all read it in a book somewhere. Well, it actually works, though. We've all seen variations of it, right? So you can get stuff like this, right? And it becomes a crown pattern. Okay, great. And what do the gurus teach you? Well, the lower low or, this kind of thing. And then you take the size of that and you take it to the neckline and you project this down and blah, 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 blah. Okay, great. So it looks for basic patterns like this that everybody respects. There's nothing proprietary, right, Mikhail? But it'll look for them on multiple time frames on all assets. So it'll look for this head and shoulders or crown. It'll look for it on 7,500 charts. If it happens to spot one, it'll let you know. But here's the thing, Michael, or Mikhail. What if I said to you, and I'm going to make up a number, but what if I said to you, hey, I looked at this pattern, and I can show you every one of them, and we saw this 7,821 times this year, or over the last 12 months. Because remember, we're looking at 5 different time frames on dozens of assets. So if you watch 7,500 charts all day, every day for a year, you're going to see a lot of head and shoulders, right? So let's say it was 7,821. I have them all on record. They're all in the database. And I'm going to make up a number. Okay, 76 97% of the time they worked. And I can prove it to you. Well, that's next level. So like some guru just read it in a book and seen it on the charts and know they work a lot of the time. Do they remember 7,821 of them? No. Did they even spot 7,821? A human could never do it. Just every so often, like a daily YouTube guru probably has seen, 10 head and shoulders patterns over 12 months, right? Right? You just can't see them on all these time frames, on all these assets. Totally impossible. And then they have this generally accepted assumption of, that's a head and shoulders pattern, and this is how to play it, and they seem to work a lot. But they don't know quantitatively. And so some of these patterns are not very good. And I can tell you which ones. Okay? So I think this is a huge part so that you have the confidence to pull the trigger. But the second thing is, you get this, or you should get this, but I'm going to assume you get this, and various patterns like it. The value isn't necessarily drawing it. The value is watching for it all the time, on all assets, on all time frames. And then it's like, hey, Mikhail, this just happened here. And you're like, ooh, that's an interesting place for a reversal. And you open your charts, right? And you're like, yeah. Yeah. Okay. So it's helpful to know, like, for example, if you see an asset like this and it's watching, okay, and then it's saying, well, if you need these touches. Let's do it this way. Okay. Under these rules, for example, we can then take the slope and project this out. You have to have the right number of touches. And so it's very good at calculating the slope. So if these are parallel, if they're converging, that kind of stuff. And QuantBox is very good at saying, well, there's going to be a down and an up. It'll tell you the down and the up. But you have to be smart enough to know, like, selling a higher high isn't what Tradar's is telling you. It's just telling you a pullback is likely. Okay? And you need to say, well, either that means you should take some profit or wait and then buy at the bottom of the channel. So you should go to your chart and draw it to and look at the price. And you're like, okay, somewhere around here, I should be a bull again. And that's really, really, really cool stuff. Okay? But if you go to the tester, like you notice I changed like scalpar, calendar, sonar, radar, testar. Yeah. But for example, let's do, okay, there's some of the, ascending triangle, channel down, channel up, descending triangle, double bottom, double top, falling wedge, flag, head and shoulders, inverse head and shoulders, pendants, rectangles, resistance, rising wedge, support, triangle, triple top. You know, it's doing a lot. Okay, Mikhail? Cool. So like 7 minutes ago, Tradar's noticed a triangle has broken through the resistance at, okay, this is the time and date, today at 10:15, possible bullish price movement forecast for the next 4 hours. Oh. So what do you think? Should you look at a euro yen? By the way, look, I haven't even refreshed the page. 8 minutes ago. Isn't that awesome? I know, right? So, cool. So what are you going to do? What are you going to do? Okay, look it. I've already drawn this for you days ago. Look at this. I mean, dude, how many times have I drawn something like that for you today? Okay. Yeah. So anyways, let me zoom in here. Okay. Oh, yeah, that's going to be a future touch. See? Oh, my God. All right. So we look at here, and it's looking at it on a 15-minute chart. That's all. Okay, 15-minute chart. So it's an entry trade. So if you had paid attention from when I drew this purple line days ago, if not even longer than that, okay, this purple line is a buying price. Buying. Buyers. Okay. Now remember, Tradar's isn't QuantBox. It doesn't know if you should be a buyer, nor does it care. It's a technical analyst. It's not your bartender. It's not your priest. It's not your mommy. It just does technical analysis. So if you're sitting around going, well, this is my price. Then you get down there. Now what? Tradar's has done some work for you. Okay? It's not groundbreaking work, but it's laborious. So it's like, I see this. Okay? Then what? It sees this. So what did it notice? Higher high, higher low might lead to a higher high. So is that the moneymaker? Is it going to make you rich? Is it going to put you in a bigger mortgage in a better zip code? 90210, baby! No. If you didn't know to be a bull on this price, then you simply don't know how to trade. And don't get all mad at me. You need to know this stuff and then be ready, willing, and able to catch this trade. Your technical analyst just happened to show you on a 15-minute chart that there was a bullish pattern that did occur. It's happening right this second, 11 minutes ago. But if you've been waiting for 5 days, then this is meaningful to you, isn't it? And so now you're long and gone. Now you might say, is it going to work? Oh, I don't know if it's going to work. Huh? If you want someone to read your palms and tell you the future, there's plenty of places on River Street in Savannah that will read your palms. Huh? Tell me the future for the euro yen. Okay? Okay? So you see? Can you see? Okay, this is for buyers. This is for buyers. This is for buyers. This future is for buyers. This is all for buyers. Okay? And so if you are a buyer and you've been waiting for basically 3 days, your technical analyst has spotted something for you that is probably useful. Okay? It sees the next level of resistance. Look again, euro, yen, 15-minute chart, but a different pattern. 70.50 is the target, which is the top of the range on this pattern. 70.50. So what's it looking at? Let's try to figure this one out. $70.50. Okay, $70.50. What's going on here? Let's back out. Okay. What do you think? Do you agree with this level here? Okay. What do you guys think? Do you agree that this could be a hindrance in the future? If we rallied up? What do you think? Do you appreciate that your analyst did that for you to make sure you don't miss it? Okay. So I would look at it this way. If I were me, I would look, let's do this in pink, a little easier to see. Okay. Okay. This could go to 70.50. I might go all the way to 71. I'll have to decide tomorrow. Yes, efficient market theory. You can't do anything of value because everything is already priced in. Because all market participants are logical, informed, and they make the right decisions. Well, I don't know if you've ever talked to another human, but none of that makes any sense to me. Okay. because I don't think humans are intelligent and unemotional. I think they make mistakes all the freaking time. I think there's massive inefficiencies. So, for example, much of the time, everything is right as rain and we trend along, and then something breaks and then people panic, and we'll go through periods of just mass hysteria. And then things will cool off and we'll go back around, right? And so, like, I've been through long trends. I've been through recessions. Like, imagine the dot-com days. Every single day on CNBC, there were guests. Every single day for 5 years saying the stock market can't go up anymore. It can't go up anymore. It can't go up anymore. It can't go up anymore. And finally, one day on the 5th year, after it going up every day for 5 years, finally it crashed. And they're like, see, told you. And what my point is, they're probably correct that the stock market back then shouldn't be going up. Well, with efficient market theory, well, everyone knows that. So you wouldn't buy it because everything is too expensive. Or the business models don't make any sense. And there's assumptions that, like, analysts are doing research and media are unbiased and all these things going into everything, and that the people in charge are really, really smart. Let me clue you in on something. The people in charge are not very smart at all. The people in charge might be mediocre in many cases, but even in many more cases are below mediocre. So this giant, logical, intelligent machine that prices everything to perfection is nonsense. I don't believe it even a little bit. Okay? I think people make mistakes all the time. I think they get greedy all the time. I think professional money managers and clients are misaligned. I think the pricing is wrong. I think the way that people get paid is wrong. Just, like, it's a fragmented, broken down, self-indulgent system. It's definitely not efficient. Okay? So I think you understand. I don't agree with it. I think there's inefficiencies all the time. Yeah. So the best way is, and this is what I've been teaching forever, and that's why I think it's the best way, is that you know where you are in the market, who you are in the market. Are you a buyer, seller, and why? And there you could recognize when things are, let's say, even if it's irrationally trending, you can measure that it's trending in the right direction. And you can also realize when it's no longer trading in the right direction. Whether it's rational or irrational is irrelevant. Okay? If you were able to predict, for logical reasons, that the move was going to happen, and then you met with good tools measured when it started to happen, and then you had the actual confidence and the guts to pull the trigger, and now you're in it. Now you're using the right tools and strategies to measure whether it's continuing, whether it's rational or irrational. That's like Sharpe versus Sortino, right? Like, there's good volatility and there's bad volatility. Well, you might have really good volatility going your way, pushing NASDAQ up even higher, even though it doesn't make sense. Well, hell's bells, it's still happening. And you stay in until it stops working. And of course, when it stops working, it'll probably irrationally reprice, and overprice lower. And so now you end up buying it back cheaper, too cheap, because it fell too fast because everybody panicked, which once again means by definition, if lots of people are panicking, then it wasn't an efficient market. People make mistakes all the time. They make decisions emotionally all the time. Peace on earth. May the pips be with you. May our profits be above average. Have a wonderful day.